Broadcast is now starting. All attendees are in listen-only mode.
Hi there, traders. Welcome to the live webinar with Admiral Markets. My name is Chris, and we're going to be focusing on Fibonacci fractals, moving averages, and using those tools, indicators for managing open trade setups. So that's the focus, but we will do that with some live charts primarily. So maybe later on, looking a little bit back at historical price and charts. All right, before we do that though, be aware that this webinar is shown to a global audience. It may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out if it is suitable for you. Secondly, please note that trading for exchange and global financial markets are considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risks involved when trading. Alrighty, so thank you for your attention, and I just wanted to get the charts going. There we go. Alrighty, so let's start with this euro dollar and start analyzing it. So yesterday we were saying that basically this push up was still, kind of a little bit unknown whether this is a hook back for a deeper pullback or is this the start of a new trend, and will price then bounce it to, for instance, the weekly pivot point for continuation. So far, we're seeing a continuation. So one of the things I said to look for is a good bullish candle that was breaking above this weekly pivot point, and that happened with this candle, right? So anyone who used that info in whatever way you thought might be useful, you could be in that trade perhaps. I don't know. Maybe you entered based on that somewhere close to the pivot point or upon the bounce or even upon this candle. Then you are up a few pips, right? It depends. It could be 70, it could be 40, it could only be 30 or 20, depending on where the entry is exactly. So from this point of view, I think that at this moment, the trade that was discussed, or not discussed, but it was like analyzed, I should say, potential trade setup analyzed yesterday. I think that the stop loss at this moment, from a management point of view, is probably best to use candle lows at this moment. I think it is a little bit of still a difficult spot, perhaps, because I'm not 100% convinced that this is not going to turn into a larger kind of correction as yet. This could still be kind of an ABC correction like this, and therefore a little bit cautious still. So from this point of view, managing a trade is always a little bit, I think at least, a question of 4 stages I use basically. And the first stage is I try to give time to the trade. I don't want to overcrowd the trade by exiting too soon or moving my trail stop loss too soon. Then if the trade is going my way, I try to reduce the risk, move into break even or lock in some profit. And eventually I want to do that rather quicker than later, right? There's a point where I get less patient. Then once the trade is at break even, then I give it a space, or if the trade is, the risk is reduced, I give it space and I try to let the trade develop towards my targets. And then when it's getting closer to the targets, or if it's taking too long, then I again try to be more aggressive in moving the trail stop loss. At this point, I think the trade is still, I think, developing okay. So I don't think too aggressive would make sense. Probably just from my point of view, putting the stop loss below this weekly pivot point, it could be fine for the moment still. 123.70, for instance. But if there's any candle here that doesn't look too good, it could make sense to use a tighter stop loss. For instance, on the outer chart, we could use 124.20, right? That could be a break-even point or a profitable point for many traders that maybe took bounces upon these hourly candles, right? For instance, an entry that was taken upon the break of these highs, for instance, with this candle right here, for instance, right? If we're looking for a continuation bounce and you want to take the risk off the table, you could do that by using this fractal right in here. There's a support level right in here. You can use that, and the trade is break even. If it continues higher, great. If it doesn't, no loss or a little bit of a profit even. So that could also be a spot that makes sense for managing any potential trades based on this continuation. Now, not everyone is obviously probably in that trade. It's just something we analyzed. If you didn't, then I don't think it's a good spot here personally, because as I don't know. I think let me analyze it with a different template, because this template is showing you Admiral Markets Keltner and pivot point indicator, which is really useful. It's part, by the way, of the Supreme Edition. So if you want to check it out, just go to admiralmarkets.com, click on platforms, go to MetaTrader Supreme Edition, and you'll not only have access to these indicators and features, but many more. And you'll get a good idea if you click on this link to check out how it can benefit you. There are a lot of extra features, 60 plus, so definitely worth your time. I want to take, however, a quick look at something else. You see how the moving averages provided support here at this point. Break, pullback. I think the bulls are looking pretty good for the moment. So using this fractal, I think for the moment does make sense. We have a break of these resistance fractals. Those fractals have green diamonds, and that should indicate uptrend continuation. We have a 4-hour candle breaking above that green diamond. So I think that there should be a continuation higher. But I don't know if this is the best moment. I think that a better spot was indeed lower, anywhere here, as I indicated, after the bounce or at the bounce. So I'm not sure if this is a good spot at the moment still. It probably will continue higher. I'm just a bit not sure about whether this is a good spot when looking at reward to risk ratio, considering the fact that still, the resistance is pretty close by. I think best is to move it to break even probably and see if it can break or not. Alrighty. So that's it regarding the euro dollar. Everything is good. Angel, thanks so much. Hope you and others too. Yes, indeed. Good point. As mentioned yesterday, we have news events this week that will or could impact price action significantly, specifically FOMC statement and the interest rate decision Friday, non-farm payroll. Those are big events for the dollar and the forex market and the financial markets in general. And Angel mentioned a similar trade on gold. Very, very good. We'll take a look at that soon. Excellent stuff. Let's first take a look at the remainder of these majors. So that would include pound dollar. So, well, we had the break. All right, price did bounce basically yesterday, as we said, at that resistance spot, but it eventually, after the small bounce, continued higher. The retracement after the break has been quite shallow, 38.2 fib. Anyone who perhaps looked at my wave analysis, which you can find here by going to analytics and then click on wave analysis right here, then you know that I was expecting maybe a wave 2 here that I thought would go deeper, maybe 140.70-ish. It bounced at 141.20, and I'm not sure if that could make a little bit deeper retracement at this point. I don't like the spot here for a potential trade myself. I don't see any trade from yesterday that would have made sense on the pound dollar either, except maybe this pin bar at the 38.2 fib. But this is something that we did not discuss yesterday. I think I did discuss it. I think I did review it perhaps on Monday. I'm not even sure anymore. But in any case, anyone who took this pin bar at the 38, because this webinar is more focused on management of trades. If anyone did take that entry, maybe right at the candle close, right here around 140.70, I think moving it to break even makes sense, or even this low, this candle low, and locking in some profit of about 45 pips makes sense. So anyone who did take this pin bar at the 38.2 fib, moving that stop loss to below the weekly pivot point now, I think is okay. Other option could be just to move it at break even, not lock in any profit. The advantage of that is that if price does retrace deeper, it could still bounce off the 50 fib and go higher. Using a wider stop loss by placing it at break even makes it more likely that any pullback will be still survivable for that trade setup. Using a tighter stop loss means that price might take out that stop loss quicker, but you do lock in some profit. I probably, if I would have taken that trade and I would be in that trade right now, I would probably just put it below the weekly pivot point at 141.10 probably. All right, otherwise at this moment, I don't see much. Let me move on to the dollar yen. Still same exact spot as yesterday, still in this triangle, still respecting these deeper fib levels, and I don't see any trade here that could have made sense. Maybe no, not really. I mean, anyone who traded in here, perhaps I don't know what trade that would be at this moment. Maybe a long, but it missed 88.6 fib and it's been going sideways, and it didn't break out to the upside either. So for the moment, I don't see any management things that are needed to be discussed. But if price does break above this resistance, there could be a bullish breakout. Same thing as yesterday. All right, Aussie. Let's see. Yeah, as I said, Aussie is a pair that I've been struggling, or has been struggling or has seemed to struggle for me, from my point of view, because it's so impulsive. Yet again, so much divergence is present. It's a little bit odd. The odd is odd, but it's right at resistance, and it's not really reacting to it a little bit, but it's going sideways. So a continuation is likely, perhaps, but still that resistance zone is here. I didn't find it very interesting yesterday. Anyone who perhaps traded it here after this bullish candle, this is not something that I found interesting, but anyone who did, I would there are two options: just leaving the stop loss below these lows, or moving it to break even. I think break even is a little bit early at this moment, but any hesitation about whether price is indeed struggling then yes, it does make sense to move it to break even. Because if it fails, then it could break to the downside. I don't see any trade here that is interesting right now. Anyone who took perhaps this breakout with this candle, this candle here, or this pin bar, could move it to below this bottom, or the stop loss, or probably below this low and move it to break even. I think it could be okay. Euro odd, Euro New Zealand do not seem that interesting to me at this moment. Yes, definitely, Angel. I'll take a look at your chat on Twitter and take a look at that. Definitely. Yeah, it's been quite a choppy ride on Euro odd, Euro New Zealand, right? I mean, no real structure. Pound yen, strong downside, strong upside. It's difficult trading. No real patterns at this moment. Pound odd, for instance, I was bullish, but pound New Zealand fell so much that I actually exited the pound odd, and it is actually trying to recover right now. So it's a little bit tricky environment um, from this point of view. Point is that pound New Zealand could be making 3 waves up here, pound odd 2, 3 waves up, but there could be 5 waves down. So it is. These pairs are one of the biggest movers. It's just that at this moment, these 4-hour charts look a little bit messy at this moment in a way. Maybe we should look at different time frames. Let me let's take Euro odd as an example, perhaps. Trying to figure out the bigger kind of structure that's going on at this moment. Looks like we're in retracement territory on the weekly chart, in fact. This upside could definitely struggle because there could be a bigger correction here. If price does get higher, I think the 61.8 could be a very formidable resistance spot for a potential down move like this for the moment. It is not a simple one, I think. And on a 4-hour chart, it is extra difficult probably at this moment because of this pretty nasty kind of sideways zone for a couple of months now. But if this does hit the 61.8 fib and turn, that turn could be interesting. Now I might be wrong, and it depends. Like if we get a good daily candle that could break through the R1 and resistance trend line, with a good close and a high, there could be a breakout too. I don't want to exclude that necessarily. It's just my bias at the moment is still bearish, especially if it tags the 61.8 fib or the 50 fib, and then there's a big wick on that daily candle. a breakout to the downside, I think, is starting to become a little bit more likely at this moment. Let's see if the pound odd would give us a similar kind of structure. Does the pound odd follow suit? And well, there is a bullish channel. It's just that if anything, it looks corrective. And 1, 2, 3, 4, 5, 6, 7, 8. It's looking pretty much the same as the euro odd. This upside could be just a pullback, in fact, for more downside. Now, that doesn't mean that the price cannot make it higher, by the way, because in a daily chart, it's still an uptrend, and it could still retest this resistance zone more, deeply, basically, deeper. Put it through from here to here. Could go up to the 78.6 fib. So it is possible that that breakout could happen. But the overall picture, I'm wondering if this is not a pullback for perhaps a move down to that channel again. But I wouldn't want to exclude upside either. So 4-hour chart. 4-hour chart made an ABC. It looks like an ABC and a pretty strong downside. So I think if it manages to break this support trend line, there could be a good breakout trade. If it breaks this resistance, then there's a good chance of price retesting these tops. But that's it. There could be a bounce there or at the 78.6 fib. So I wouldn't rule out upside. It does look like eventually price could turn, just like the euro odd. But the overall charts are looking not as easy, as pretty choppy at this moment. These particular crosses. Flavius has some trading ideas. That's excellent. Let's take a look at those, because for the moment I don't see them. So it's great, because for me, market is stuck and on high time frames, that is, and is not giving any particular swing setups that I find interesting at this point. But that's that beauty of intraday trading. Nenet, if I see him, his showing his and seeing his intraday / scalping or swing scalps, how he calls it, day after day, very impressive. And that, of course, could be a little bit easier when, not to say that intraday trading is necessarily easier, it is actually more difficult. But my point is that, there is swing setups, you are kind of a little bit vulnerable for trending charts. So if that doesn't happen, you're kind of waiting. When intraday trading, you should be able to find those charts that can make that movement. In any case, Flavius is talking about the pound yen, and he's looking for a dip down to 154.20. There we go. Stop loss 153.50. Alrighty. Hang on, just analyzing some factors here. It would make sense, I think. I'm not really sure if this pullback will happen on time, though, in the sense that it could be breaking on the outer chart right now. The R1 is the target. I would not aim for more, in my view, because of the fact that there were 5 waves down, or potentially 5 waves down, and this could be an ABC, and hence it's okay to trade the C. It's just that if price is now making that C wave, it could finish the C wave before it makes the retracement. But maybe Flavius is already in that trade and he took it here. I'm not sure. Or if he means in the future. If he's already in that trade, then great job. And that was a good continuation setup. Decision, sorry. And from a management point of view, because that's the focus of this webinar, I would, for the moment, probably leave it at this spot. But I think that soon, if we get this candle closing above the weekly pivot point, I would probably just use that candle low and move it to break even, to be honest. Pound dollar. Okay, got it. Yeah, Flavius has entered those trades already. So yes, I would be 4 minutes from now. We'd probably be moving it to break even. That would be my decision. I also traded pound upside, but I traded pound odd, pound New Zealand. Fortunately, pound New Zealand was a loss. Pound odd was close to break even. But pound odd is moving up again, so maybe move the pound odd too quickly here as a trail exit. But this pound New Zealand fell so quickly that it looked a little bit shaky. Maybe managed too quickly. It doesn't happen to me, I think, at least, too often, but this is an example of trade management where I probably did maybe move too quickly. But then again, in my favor of doing that was this 4-hour candle, which is not an insignificant candle either. It is pretty big, it is volatile, it closed near the low. I knew that this could be a pullback, but that particular candle, plus the pound New Zealand, did make me reason that a kind of close to break even trade, small loss, is probably better. Now, I think that decision made sense at the time. In retrospect, yeah, maybe a little bit too swayed, too influenced by the pound New Zealand trade that went against me. So just sharing some feedback about management kind of ideas. Typically, I am patient at the beginning. Here, not sure if I was patient enough. Now, difficult. Sometimes these are kind of gray areas, and it's not always clear. But that's why we're here to learn from these trades and try to improve. And also, if you have a couple of losses in a row, then typically the trade management gets tighter, right? Because you want to avoid a larger drawdown. This is kind of a psychological thing that is difficult to avoid. It is something that is in a way more natural. If you have a win streak, it's easier to be It's easier to be patient with the trade setup than if you have a small drawdown or even a big drawdown, right? So that is naturally kind of a thought. So what we try to do is still use the same trade management style that we have normally. That trade management style could depend whether we're trading with the trend or counter trend too, by the way. It doesn't have to be exactly the same. With counter trend trades, I typically tend to be less patient than with the trend setups. But the streak should not influence it too much. Unfortunately, it does. So we got to be aware of that and try to compensate that a little bit, but not overcompensate it either. So it is a mental kind of thing as well, obviously. And it's good to have rules, by the way, too, but sometimes those rules are not 100% clear. How long do you stay patient? How long, when do you become more demanding? It's typically more gray area, even though there are rules, or at least for me, that's how it works. Regarding the pound dollar, let's see. Great job. Flavius was able to probably get an entry around here, I guess. At the beginning, maybe. Let me check out when it started to. Probably just before our webinar, I guess, or right at the beginning. I'm not sure. Around that time, maybe an hour ago, managed to get this upside. Yeah, I personally didn't like this particular one, but great job. It's moving nicely in your way indeed. And I didn't like it here because for me it was too close to resistance and there was that chance it could retrace deeper. I do like bounces like at fibs, so a candle like this, for instance, would be okay. Oh yeah, great job because it is moving higher. I think the last hour's candle could be used for a stop loss. All right, and that's good because you can see everyone has their own, has a different view, has different trade ideas in mind, has a different analysis, and that's only logical. That's what one chart, thousand views. Ah, great job. All right, so euro pound. This one needs some dissecting because it's broke this rising wedge, but then it bounced at the double bottom. Yesterday was very strong bearish engulfing twins though. And certainly strong divergence between these tops, plus a rising wedge. So that did make a lot of sense upon the pullback after the rising wedge. Tricky 4-hour candle though. That's an example of price action not always, even on a higher time frame, is not always giving the entire story. Because look at that bullish candle, but totally reverted as price falls. I would say it's looking bearish for the moment, but I would like to see, obviously, but I would like to see is some kind of bear flag probably, and a break of that flag. Anyone who traded at these fibs or upon the break of the falling wedge, sorry, rising wedge, I think could move it to above the stop loss. If you're wanting to get the risk off the table, you can use the high of last hour as well. At this moment, I think bearish pressure will probably continue, but considering the average true range, uh, I might fall a little bit, but how much movement will we see today? I am a little bit skeptical about that for euro pound. I would maybe rather wait for tomorrow, rather wait for price to show me a little bit more info. Will it make a flag like this? Will it retest and fail to break maybe this resistance? Will it continue to break and then make a flag? Euro pound is not a huge mover, so I think waiting probably till tomorrow, in my view at least, would be the best probably. Um, let's check. All right, let's move on. We can take a look at, I don't know if you want something maybe like, oh yeah, gold, right? We want to take a look at gold. So finally reacting to the resistance zone, and we're seeing some bearish price action and support trend line. If it breaks that, there could be finally that what I was expecting already a long time ago is a bigger correction. This upside lasted a bit longer than I expected. I thought that price would stop around this zone here, this resistance zone. Broke through that, made it all the way up to the top. If it breaks through support, I think it could challenge the downside again. Maybe first this trend line. Well, maybe first these tops, but and each time it breaks, it could fall to the next support. If it doesn't break, then there could be a breakout if there's a weekly candle that could push through all that resistance. And that could happen. It could push higher, it could bounce and test higher resistance. And then, I think it depends how price responds to the higher resistance. Can price hold, or will it bounce from that zone? Yen was a setup that I traded to the upside this week. One of the setups that is moving quickly in our way. That's good. Other setups were not doing as well. Euro yen did move quickly our way, but ended up for only a small win, unfortunately. Otherwise, as I said, swing setups are struggling a little bit last 10 days for myself. But yeah, if swing setups can have that. It can happen when markets are a little bit like this, up down, and you're specifically if you're looking for breakouts. But this one is doing well. Other instruments, S&P 500 had a bearish day 2 days in a row. So that, I don't know, that could mark a little bit of a retracement, perhaps. And if it does, then it's looking like this is a wave 4 and it could be a wave 5. I don't know for sure about that, but if it is a wave 5, that would indicate a potential bigger correction. How big, who knows? But that could lead to, if that is the case, maybe, for instance, A, B, C, for instance, like that. Now, to not, to be on the cautious side still. So I think that this is looking like a breakout at the moment. I don't see a candle close below the fractal as yet. I will answer you through Twitter, Angel, because at this moment I don't know what those numbers were and how to change it at this point. I need to look into that. It probably will break though. It's just that it didn't yet. In a way that not the fractals, maybe this trend line. Next hourly candle probably. We'll do that. Fib from, let's see, maybe here to here could be the wave 3, 38.2 fib bounce. Could be wave 4, 1, 2, 3, 4, 5. Maybe. It's almost a little bit scary because of the massive uptrend that has lasted already for so long. But Yeah, could be. DAX moving lower too. Let's see. Yes, Fed is another important dot on the road, or not dot, but event on the road. Nasdaq and S&P, Dow Jones, sorry, are also in a little bit of a bearish mode. Although the upside went a little bit further, I do believe, past the 50 fib, and with Nasdaq, I think it went even further. Nasdaq, it actually even went above this low. So definitely the bounce was stronger on those. EuroCAD does not look interesting. It's just very choppy at this moment. Could break. Keeping an eye on these levels probably. Like this. And let's see, Amazon still continuing high. I saw the bullishness in Amazon with regard to price action. Higher high again. All right, I probably don't see anything at this moment that is much worth discussing, I guess, unless you have something you would like to take a look at. Yeah, New Zealand yen, yen. Let's take a look at those. I'm in the CAD yen. Let's see how the New Zealand yen is doing. It is probably about halfway a range at this moment. Let's see. There we go. And good momentum. I think it does look bullish at this moment, considering momentum. But because it has moved up already quite a lot, I would probably wait for a flag. And it would be sweet if that flag didn't retrace deeper than the 50 fib. 80.22, 80.38. If the flag goes like that to those levels and bounces, the bounce itself or the breakout, I think, could be interesting. All right. Yen, pretty similar, just a little bit less bullish. I think the yen would be good if it could place a daily candle close above this line. What is the line? It is 89.10. Oh, that's a weekly chart. So anyhow, daily candle above it, 2 would be okay. 89.10, I think. Yeah, 89.07. That could signal a continuation, I would say. This is probably an ABC correction, and it could actually be starting an upside here too. It does have a lot of fractals though, which I would say would require a little bit of. If we had a breakout candle here, it is trying to break out. I would probably still keep an eye on whether it can make a retracement here. If it retraces and bounces again, I think that there is that chance of a breakout. It's just that it is still at quite a hefty level of resistance. But if it breaks above that, yes, I think that this could be an A, B, C correction like this. A, B, C, and bullish break could happen. So New Zealand yen, again, I think are looking a bit bullish. I think that we might see a bit of a dip here, but ultimately a bounce, a continuation possible. So, and on the New Zealand yen, if there's a flag, I think it could be looking interesting. Maybe more so even in the odd yen at this moment. We can take a look at the odd New Zealand as well. There we go. To get a little bit of a feeling for the difference between odd and New Zealand. Odd New Zealand surprised us a little bit because there was a break, but reverted way back down. And difficult to say at this moment. I would say probably that it could go either way. Bounce up seems a little bit more likely, but that could fail and then we could move down again. So I don't see any particular favorite when analyzing at this moment. For the moment, it seems pretty much caught in a wedge. Or sideways move. All right, so if you're looking for more info regarding how to use some of these indicators, feel free to, once again, go to the platforms, go to MetaTrader Supreme Edition, download it for free, and you can use some of these indicators that I've shown too, like the pivot point and the Keltner and mini terminal, many, many more. As always, of course, feel free to join more webinars. Go to Education, Forex, and CFD webinars for joining tomorrow and next week. Same schedule as always. Plenty of webinars to choose from. You can also go to recordings. We have courses here on the right, Zero to Hero, Forex 101, Masters of Trading. More articles, of course, in both education and analytics to be found. And if you're interested in opening an account with Admiral Markets, feel free to do that here, start trading. And if you're still interested in knowing more about Admiral Markets, feel free to reach out here through About Us, and you'll find out how to contact Admiral Markets and more about financial stuff, testimonials, etc. All right, regulators here, everything, all the info you need. We'll be back tomorrow. Nennet and I will be taking a look at, I forgot, let's see. Oh yeah, trading psychology. That does influence a lot of things, including this trade management. And it's very important to try to not be swayed too much by our kind of sentiment at the time and try to implement the trade management that is based on what's actually happening underground, what's happening on the chart, what is happening with price action. That can be easier said than done. It can be also easier at certain times than other times. So it's really good to learn from past trades, try to implement ideas how you can improve and stuff like that. And the more experience, the easier that becomes too. But definitely trade management is something that is very important to practice. I think. I mean, you could trade set and forget as well, by the way, but that also requires experience because It's not that easy also not to do anything with an open setup. So both require experience, and definitely exits so important. It's obviously it's the way how we can cut losses short and let winners run. The entry will not do that. The entry is only part of the equation. We spend a lot of time on entries, not so much on exits, but exits are so important with regard to our trading. So definitely don't underestimate, I think, in my view, trade management. All right. So that's it for now. Thanks for joining. Wish you all great trading and talk to you soon. Cheers.